I'm joined today by John McRoberts, Chairman and CEO of MedEquities Realty Trust. Welcome, John.
Thank you.
So MedEquities completed its IPO last month. How does it feel to be a publicly traded REIT?
Well, it feels great. It's good to be back into the public markets again. We actually did this with a company years ago, but it's a milestone for MedEquities. It gives us the capital to continue to execute on our business plan. We were able to take that money and deleverage the company, and so now we have the capacity and dry powder to close on additional acquisitions over the next year.
In light of the recent election results, the healthcare sector may face some public policy changes. How do you see that impacting your business, or is it too early to say?
I think it's too early to really, with any degree of comfort, identify with a lot of clarity what's going to happen, although we feel like the Affordable Care Act there are some parts of it that need to be corrected that didn't work so well. There are parts of it that were very good. And so at the end of the day, we feel like there will be a system in place that takes the best of what was there and fixes what was not working so well. And if that happens, it will be very good for our industry. Now, having said that, there are a lot of reimbursement pressures that companies are still going to have to deal with and effectively adapt their business models to, which for us, we're working with companies that we feel like are doing that very effectively.
And a major development last quarter for the company was the signing of the Baylor, Scott & White Health to a new lease at your Lakeway Hospital property. Can you explain a little bit about why that deal is important to the company?
That was an extremely transformative transaction for us. We bought that hospital at a time when it was operated by a single asset company, not with a corporate sponsor, and Baylor was very attracted to that hospital based on where it's located and the area that it's in. So now we've got a company like Baylor that's well recognized around the country and the world as being an excellent healthcare provider, and so we've taken that single asset company and replace that tenant with a major healthcare provider and in doing so, with the credit metrics that Baylor brings to the table, we've created a lot of cap rate compression and created a lot of value for our shareholders in that transformation. So it's very good for us.
And how would you describe the supply-demand balance for healthcare real estate in light of growing demand for services?
Well, demand for services will continue to grow with the aging of the population, obviously, and so that's unavoidable. But we do feel like facilities, the capacity is okay in this country today. There will be a lot of facilities where the beds will be shorter term stays, and so that can absorb some of that capacity. There will be development of new product, but that's largely going to be to replace older assets that can't be reconfigured to effectively compete in today's environment.
Great. Well, thanks very much, John.
Thank you so much.
And for more news and information on all things REIT, be sure to visit REIT.com.